Good afternoon, um, everybody. Welcome to today's update on our instruments. And today promises to be interesting. And I want you to uh, go over this video over and over and look at what I've been saying. To the last week was trickish, very, very trickish with the news and all of that we were getting. And now we want to understand what exactly is going on and what we should expect from the prices. To have a better understanding, into what has been happening uh, to every majors or every dollar correlated pairs, we have to look at the DXY. DXY will put things in more clearer perspective for us. Now, this is DXY. We are going to look at DXY. And interestingly, DXY and US dollar index, they are very similar. Euro USD, Euro dollar has been quite funny and a bit difficult for most people to interpret as to what direction, the immediate direction of the market. There is no doubt about the fact that we know we are still coming down. But when is the market going to be ready? If you see this, you will be confused as to what the price is trying to print. So let's look at the DXY, and we're going to, from that DXY, we're going to step down to all other instruments. Now, this is the weekly time frame. I've said that with going down to the daily time frame, I said that we still need a one more push up to get at least to this area where we expect a resistance to push the price to the downside. And so these are not closed, but this most likely is going to close like this, in few hours to come. And when it closes, we should be expecting probably a reversal, a pinball, or anything, or a doji. That doji may form throughout the week, or we may have a descent. And in trying to look at price action on the lower time frame, when you are nearing the end of your correction, you must most of the time turn to the higher time frame to look at what the higher time frame is printing, for you to decide what exactly. Price, of course, may fall from here with what we have seen here, but we still going through the internal structure of this correction, we felt that we still have one more leg to go up. And the last video I think I did, I told us about, okay, we need to see the third wave of the final leg, and I'm going to show us now. So let's turn to the daily time frame. Now, the daily time frame now, we had said that this is an A and this is a B. Of course, trying to look at the final leg of the zigzag to the upside, and we said this is like a 1 and a 2 and a 3, a 4, and that we are seeing the fifth leg. And I said we need the third wave of the fifth leg to the upside to give us something like an engulfing candle to the upside. Probably that would finish that move, and thereafter we're going to come down. And what I said is what is now coming, to reality now. We are now seeing this going up as an engulfing candle, which it's different from all this corrective formation that we had seen. And most likely it's going to close like this. And immediately it closes, we should be seeing a doji, something like this, or something like this, appearing the next day. And we should probably, that may go for like a day or two, I don't know. but we are going to be seeing that to finish the wave 4 and the wave 5 of that fifth wave of the last leg to the upside before we come to the downside. And that is what these are giving us. It has shown us clearly what the price had been doing, which was difficult for us to interpret on the lower time frame to see, okay, when they are ready to move. We are seeing all these moves like engulfing candles, on the lower time frame that was quite difficult for us to print. And now we are seeing this going properly to close, and we had expected third wave here, and for these, the third wave of the fifth wave is going to go up and close. Now, there are levels we don't want to breach, and if you're going to breach that level, then you should know that then something else is happening. But the way it is, I still much believe that this is the last leg to the upside, and anytime soon, these will be falling. Now, the internal structure here now, we know that this is wave 1 and wave 2 of 3, and a 3, a 4, and a 5 of 3, and a major 4 to the downside, and then we're now seeing the fifth wave. So the fifth wave to go to finish itself had been where it has been very complex for anybody to read, and because there have been overlaps of price, up and down overlaps, but now everything is clearer. So let me try to enlarge, zoom in, and bring my drawing for you to understand the way it is now. Okay, before I do that, this area marks the end of wave 3 of the second zigzag, which is the wave C. Okay, A and a wave B, and this is wave C to the upside, and this ends wave 3 of that wave C, and this is the lowest of wave 4 of that wave C. So in between here, we are seeing an ABC format, an A and probably a B and a C format to give us a wave 2 here. And that is what we are seeing, a wave 2. Let me bring out the drawing for you to understand it. Now, after wave 3 and a 4 of 3 and a 5 of 3 here, which has finished with, okay, in that case, I may now probably push this so that you don't get confused. Of course, we know 1, 2, 3, 4 of 3, and 5 of 3. So as to have finished 3. Wave 3 is completely done here. And this to the downside is wave 4. Then we now begin to see these move, an A, B, and a C. And for me, when price went up to make this had been where it has been so funny. The height here is wave 1 of 5. So, and the low here, at first we thought this could be the end of the whole thing and we're coming down. But looking at this reaction here on the daily, then we're not ready to come down. Even this one on the daily, if you had checked on the daily, with this week, within correction, still tells us that we may be going up. So, but of course, we were too much anxious for us to turn to the downside and break structure. But the DXY was not having any of that, unlike the euro dollar. So we now see this move to the upside as wave 1 of 5, and this now closes this as wave 2 of 5, and this is going as a wave 3 of 5. Then we're going to have a 4 and a correction. So once we begin to see it burning out, to see it burning out, then we know that we are nearing this 100% where we expect a change of pattern to the downside. We are very close to that area. That is what I'm seeing now. So we are within wave 3 of 5. If I go to the 4-hour time frame, so this is where it got messed up. So looking at the larger time frame, it's kind of helped us to see it more clearly that this is what they are trying to print. And this is wave 3, is the wave 4. And in here, it's the correction of ABC to give us a wave 2. of the ending diagonal in this case. So height here is wave 1, and this is a wave 2. This is a C of wave 2 that came down like 5 waves, as of course we will expect it to come down in 5 waves, a C of wave 2. In between, we have a B. It could have been a WXY anyhow, you know, but the most important thing is when you break structure to the downside, and the kind of candle breaking the structure to the downside, so the upside. So this is the internal structure of wave 3, and this wave 3 is going to burn out because it's going to run like a 1, 2, 3, probably a 1, a 2, and a 3, a 4 of that to finish that wave 3 proper. And when that happens, probably price is going to walk in here to do a wave 4 or major 4 or 5 and go up the last time for the kind of reaction that we expect before we begin to turn down. So our focus and our attention should be on this area that we expect the 100%. Of course, price may break slightly beyond this area, but we are going to be looking at, you know, the area of resistance, which is around this area, which coincide with this red here. It coincides with this red, just slightly above this zone that we expect our 100% extension from A, B, and a C to reach. So now, if you look at your US dollar index, it's pretty much the same. So I don't want us to, you know, you can see it's pretty much the same. So we are breaking, that's wave 3 going up, and probably we're going to have a 4 and a 5, maybe around this area. And the resistance also, it's here, and we'll see what price is going to do. We are almost there, and this thing is going to turn to the downside. Maybe Monday or Tuesday, we might change the pattern and begin to come to the downside. We have to follow this. Now, with that said, we are going to now use that to interpret what we are seeing on euro dollar. You know, with 3 of the last 5 waves is just breaking the top here. That's what we saw. Let's look at euro dollar. So if you now look at euro dollar, you now see that it is just capping it. And if you're not looking at other instruments to interpret, you may think that, okay, this price may just push back here and begin to go up. And you can see price action, how it can be confusing. I want you to focus here. If anybody is just looking at price action, look at this price action. This price action for anybody will be a good price action for the buyers to take over. This is on the daily time frame. It's a very good price action that has broken this area, but never took the high of this. And they even still went up to make it take the high of this, but there was a clear rejection and price began to come down. So anybody would have been so confused as to what exactly this means. And that is why you don't just take price action alone. You have to look at price action, you have to look at structure, and because the price action is within consolidation. So it's just a fluke. It was a fluke to deceive you. That's what has happened, thinking that we are ready to go to move up to the upside, but then price is going down. So with these, going on the lower time frame, also on the, let me bring out the drawing. So it's still the same. Then we can see that with these, we have done a wave 3 here and a wave 4 here, which is the highest, and we had to break these. And this all mess, like a way to the downside, giving us like, oh, we are doing an ending diagonal here, actually meant that we were actually working out an ABC, and then an ABC of a wave 2 of the ending diagonal now. So you can't say that your wave 3 ended here. You have to look at where the retracement got to now know, put it in clear perspective that this is actually the end of wave 2 here now. So this is a place to break to the upside to confirm that we are going up again. Now, with this coming down, it's capping here. The wave 3 that is going down is yet to break, but it's going to break here. And we are going to be looking at this extension from here, which is an A to a B and to a C of 100. So our entry that we gave over how many weeks now may just be where price would touch. Precisely, it's falling at 1.07369. But for is it the brokers, what they take now, the spread and all of that. So we said maybe 1.07380 would be ideal for most people to enter and watch. And if you're watching and if you're not taking too much risk, you can just wait in there for price to pick you and go below this area for your stop loss. Probably you put your stop loss at, let's say, 1.06400. That would be good for you. I don't expect price to break here, but price may not even break this low here, may not take it. And if they decide to take it, it will be momentarily and they're going to force it back to the upside. So this is where we must not break now. So, and if you come here and put it at 1.06400 as your stop loss, I think it's going to be okay. This will be a good area to look for your buy now. With what we are seeing, price may just continue. This is wave 3, and we need to see it burn off or burn down. So this is still coming to the downside. That is what we are saying now. It's still coming to the downside. If we go on the lower time frame, let's see the 4-hour time frame. You can see all those spikes are just very crazy. And of course, rightfully, this one went up as a 5-wave structure, which may mark, the beginning of an impulse. But of course, we know that wave C also will go up in 5 waves, format like that. But the way it was just breaking and all this structure here was so messy for anybody to probably have interpreted. And we know the kind of encroachment that happens when the wave is burning to the, is burning out, wave 3, wave 1 encroachment and all of that, or wave 4, wave 1 encroachment and all of that. And that is what we noticed here, even on the first wave of that ending diagonal. So the lot of encroachment here, and we saw that, and we now had a wave 2, which is the C of wave 2. Probably this may be the B of a wave 2. Probably we may say that this is a C of B. Probably we come down to have a C of B. Probably yes, a C of B before we did a C. So this is a B wave now. So this B wave, we probably would have like if this is a C of B, maybe an A of B is somewhere here, and this might be a B of B, a B of B, a B of B, and a C of B, and to now have the major C to finish 2. And this is wave 3. And wave 3 also had gone down in 5-wave format, and probably we are doing a wave 4 of that 3, and we are going to finish that, maybe breaking low, have a 4th wave correction. We just need to be very careful and just look at what the bigger structure is. So this is like a wave 3 of 3 now. Sorry, wave 4 of 3. So in between here, a 1 and a 2, and a 3, a 4 of 3, and we are trying to do a 5 to finish. I think 5 may have finished or about finishing 5 of this entire structure. So when we know that we are in wave 4 is probably when we break this to the upside. We now know that, okay, we are done completely with wave 3 or 5. So wave 1, sorry, let me just go again. So this will be wave 1 of 5 here, which has finished here, and wave 2, here, and this may just be within 3 itself. Probably will finish a wave 3, slightly breaking here, and wave 4 we go up, and we come down to be finished a wave 5 of that, and we should be thinking to bounce up around the area of interest. And that area of interest, is here, which is at this area. And that will be the area of interest around this area. Price is going to break this. Price is going to take that. Price is going to take that. So we may be finishing probably before we get to this point. Yeah, I would expect the price to finish up its wave 3 before we get to this point, have a wave 4 and a wave 5 around this area without breaking this level, and we are going to go to the upside. That is what I can see. Now, that said, let's go to what gold is going to give us. I want you to see something. I want to remind you of this price action again. Look at this price action within correction so you can see the way it is within correction. So you have to be wary when you are seeing price action and it is occurring within correction, you don't take it too much serious, except if it's breaking a structure. When it's breaking a structure, then you take it very, very important. So let's look at the lower time frame from 1 hour of gold. Now, this is lower time frame of gold. Gold might be seen doing something different from what is happening to other Euro USD, because everything is, you may say this is like a wave C and this is like a wave 5 of, of the ending structure, but it may be different. So we need to look at the higher time frame, to see what gold is trying to print. So the way gold is going up is like it's recovering, but then we are going to put it in clear perspective. Let's first look at the weekly. So looking at the weekly, this is where we need to pay attention to what gold is trying to do. We had seen this run to the upside as a wave 1 and a wave 2 here, and that we believe that we are within wave 3. And so if we are within the wave 3, we are taught that the first part of wave 3, a 3-1 and a 3-2, and we are doing a wave 3-3. So we are still within a wave 3-3, and probably we are still trying to make a correction or a bigger correction of an A to the downside, a B and a C. We thought that, or that the old move down here may have finished the correction that we are expecting of, the entire run to the downside, and these are corrected in 3 waves, because on the lower time frame it actually corrected in 3 waves, and now we are seeing this as to run an A, a B, and probably, okay, we may see this one as a run an A, B to the downside, and this may be the first move of an impulse. We may think that way is the first move. So we're now seeing a possible ABC in this area to the downside. I'm going to come again for you to understand what I'm trying to say. For me, 2 things are possible here. The 2 things that are possible is for us to see that they move to the downside. This is A, and that this is a B. If this is a B, we will need a C to go to the downside to probably take the low of this. And if it takes the low of this, then it makes the entire run to the downside a 2 in respect to these. So we might have an A, a B, and if you're going to have a C, it means that price may be coming down more lower to break maybe around 1915, maybe. But if this has added a 1, 2, 3 to the downside as a correction to this, and that this is a new move, If this is a new move, then we should not expect this correction to take the low here, which means price should not take 1974. That is what we are saying. Price should not take 1974 if the correction so far we are seeing here, it's correcting the entire run from here to the upside. This may have finished its own correction of this move from here to here, and it may have finished its own correction here. So we may see a beginning of an impulse here, and this as a three-wave may be just correcting this without breaking the low of this. We are not seeing enough momentum to say we are going to take the low of this, but it's possible. So those are the two scenarios. But in trying to understand this, let me bring out my drawing for you to understand what I'm trying to say. What I'm trying to say is that these to the downside may be this forced to move or a complete correction here. But if it's not complete and this is just an A here and this is B, so if you do an 100% essentially downside, it's going to take the low of this and take the price here at about 1915 or 1916. So it will take the low of this. If this is an A and this is a B, and the C will come and take the low of this at around 1915. But if the correction that we are seeing here is a cursor to this movement here, and this is an A, then if it's an A, then sorry, if it is an impulse, which is probably a 1 or an A, a bigger A, then this to the downside will be a 1, and this will be a 2. And if this is a 2, the 100% movement to the downside is going to come here. It will break this low and come to the downside here. And that means it should not take 1994. So we are looking at possibilities. That is what it has given us on the lower time frame, in the upper time frame. But when we see this, like I said, we should not be reading too much price action within consolidation. Structure has to be broken. So what is the price action that is breaking that structure or pushing back from the low to break structure to the upside? We have to look at the price action, not within, because if you had wanted to interpret price action, you would have thought that this kind of price action on the weekly is going to go down and break structure to the downside and continue to give us a seller pressure. But because it was occurring within consolidation, you have to know that this is corrective. Okay, so like also we know also that the price, the trend is still looking up and we are not coming down really. We're only correcting this move and we are still going up, but we want to know when it's done and for us to continue to go up. Let me turn to the daily time frame to look at that again. Now, looking at the daily time frame, so what we are seeing here now is that this move this is one move here, and that this move to the downside corrected this move entirely. This is impulsive, and this is like an A, a B, and a C. This price action around this area is very strong. It's very strong. And that is one thing we have to look at because it's not within this correction here. So it's very strong here, and it pushes price here as an impulse. So, and that's why we are saying that we are not thinking that this is an A, B, and a C down here at 1915 or 16 that I said. But rather, this may be, from this price action to push price here, may be the first impulse, and we are seeing an ABC format or formation around this area, where this move to the downside is an A here, a B here, and if this is a C, is it truncated? Or that we are still having a complex of a B around this area, that this may be an A of a B. After finish this, a much bigger A here, this may be A of a B, B of a B, and this may be going up quite like, you know, a 1, 2, 3, you know, motive wave of a C to finish this C of a B. And if it's a C of a B, then we should turn down and finish a C. And if that C is coming down to break the low, probably around this area, without taking this low, we might be seeing price moving back to the upside from this area, if that is the case. And price will break this. Now, the way I saw price structure on the weekly time frame, I said you should not interpret and look at this one also. It's going to be looking like this on the later time frame, and you may think that price will be coming down. We don't have to take it, as important, because it may close like this and as an hammer. You think price is within a corrective format. So price may come down. If it's strong enough to bring price down, it will just take this low around this area without breaking this low, and price will just go up. Because all other structures are almost finishing. DXY is almost finishing its structure. Euro dollar, US dollar index are almost finishing their structure, and probably they just have one more push down to the downside, or like two more waves, to finish a 3, a 4, and a 5 before they push, to the upside on the Euro dollar, and inversely on the DXY and US dollar index. So we might not take this as important. But we'll need to see how the price going up is going to do. Because this is not, if this is going to be a wave C, this is where 161.8, at least it should touch 161.8 without breaking here. If we are touched this place and we are coming to the downside, we must, okay, we have done an A here, a B, then a C to come around this area, take the low one more time, then we go up. But we are going to pay attention to what is happening. So I'm going to this 1 hour time frame on gold. So we are going to so these are taking the top here, but we need to see how this price, this also has been so corrective, like a 1 and a 2, or probably an A, a B, and a C here. We need to pay attention. How much this one is going to go to the upside, we need to see that. If it's going to go to the upside and break the structure to the upside, then it means that we are going back up. Otherwise, it may just come to the downside, take the low again around this area, and bounce to the upside. So, of course, that is not too much for price to do, to come to 1998 or 1994 and bounce up to the upside. It's not too much for price to do. So we are going to be paying attention to what price is doing around this area. So price, taking this, tells us that we are breaking wave 4 to the upside. So we need to see if price is going to break this. And if price should continue to go up, take this structure and break this area and go up again, it tells us that probably gold is already going back up and we might not be coming down again to take the low. But of course, gold still has that potential of breaking down to take this low, take this low, take this low, and probably, come to this area of 1996 or thereabouts. So price may still do that. But again, for all of those things that we are seeing here with a break here, gold might be running another structure entirely, because it might just have been done, below here, and just be running its own structure to go more to the upside. But we need to break some level, psychological level here, like these levels has to be broken for us to know that gold is ready to go back to the upside. And with that, I've come to the end of today's video. Do watch it. I'll be giving you an update during the week. Thank you.